Sandeep, you had some political experts at the conference as well. Was the general sense that the diesel price hikes are here to stay, they will have every month, or do people fear that come state elections starting next month, you might see ad hoc kind of moves on the fuel pricing front?
Well, to be honest, I don't think anyone expressed any specific opinion on the fuel price hike and the impact of the state elections or the electoral calendar as such on government decision making. But the expectation is that the responsible fiscal policies that we have seen in the last couple of months will continue. I mean, if that is not the expectation, I think the market will see a steep fall. So I think that's the base case assumption here for the markets right now. The way we are trading, it's clearly a continuation of the same responsible policies, unaffected by short-term political pressures. As far as the political outcomes are concerned, I think most people still expect that 2014 election will throw up another coalition. So the key takeaway coming through is that coalitions are here to stay, and what's important is what's the composition of the partners in the coalition and who are the people manning the key ministries, because that's more than anything seems to decide the fate of good governance in this country.
Given the kind of expectations that you're hearing about, do you think the budget will be a big game changer for the market, or do you think global flows and global risk on is far more important than this local event?
You know, no budget ever is a game changer, other than the fact that it creates excitement for maybe at best a couple of trading sessions. I think the task of righting India's fiscal imbalances is a long task, and it will probably take a good part of one government's whole 5-year term to get us back in shape. That is extremely important. That will be the key determinant of slightly medium-term market returns. And on top of that, what's happening in the UK, US, and the global position. So right now, the base case assumption here is Europe is not falling apart. It's going to stay together and hang together. And the US will see political debates, discussions, and difficult bargaining that will take place between the Democrats and the Republicans in the House, and let's see what are the outcomes. So, I think base case assumptions are slow growth in the West and some kind of fiscal consolidation coming through in India.
What are you picking up about flows and interest though at the gathering you've got there, Sandeep? Because recent data seem to indicate that most people were, full up on India. It was an overweight India position. Do you sense that they're looking to top up more, or they're about done in the first couple of months of this year?
No, I think people will come and buy where valuations look compelling, where management and earnings growth story look believable, and where they believe that government policy cannot completely derail the growth story of that company. So I think there is appetite for Indian stock. There is a recognition that we had got to levels where there was value in the market, but now no longer so. So now it's going to be a stock pickers market, a hard long grind through the year. And at the end of the year, I think it will probably be stocks which will be winners rather than the whole market.
In that context, though, is it getting tougher to pick stocks, Sandeep? I mean, till last year there was bipolarity in sectors, in the sense that the defensives had very high premiums and high beta didn't. This year, earnings have been so disparate within sectors themselves. Do you expect to see a lot of bipolarity within sectors, and how individual stocks trade and where they trade at?
Yes, I would think that now, the easy part of, picking one sector and running with it and still making market beating returns just because you were aligned the right way in the right sector during that phase is definitely behind us. So this is the tougher part of the market. As everyone knows, the market has been listless because the earnings momentum is still missing. And it's going to be, therefore, very, very selective winners that we see in this market.
We've gotten a lot of money, Sandeep, over the last 6 months since the September reforms happened. Is there a risk of disappointment or disenchantment if growth or earnings don't start picking up visibly over the next couple of quarters? Could it start weighing on the patience of investors who have deployed this capital?
Very much so. I think we definitely... sorry, I just need to excuse myself. Yes. As far as the market is concerned, I think it's not going to be one easy run, and the sectors and the winners clearly decided where issuances are not coming, and growth is still strong.
Okay, you have a sip of water, Sandeep. We'll just come back and re-engage you. Market's down about a point now, the Nifty, a couple of points. The Sensex is also down a quarter of a point, though the mid-cap index still remains in constructive mode. So it's really a listless kind of morning of trade so far. Sandeep, if you have caught your breath, any more? Sorry, we'll just get back to that then in a minute. By the way, some of the mid-caps which are doing well include Hotel Leela, that's responding to the news on a possible deal with Reliance, and RCF, India Bulls Finance, Allahabad Bank and Jet Airways are also not doing too badly. Sandeep was asking you about how global investors might react if growth does not pick up. What is the kind of profile of investors who've put in this money and how resilient they will be to this recovery taking longer?
I think anyone who comes to India knows that this is a longer term story. So I'll be very surprised if people continue to focus on just short term returns. The money which we have got is clearly come because of cheap valuations. From here on, I think the proportion of active money which looks at specific stocks should increase. If it's just ETFs which have come through in terms of taking advantage of cheap valuations, most of that flow is definitely behind us.
Coming off now for the Nifty, so it seems to be under some pressure, but the mid-caps are holding out a bit better. Sandeep, have you worked out a strategy in terms of what you think is the best approach to take for the rest of this year? Because at the start it looked like high beta would perform, but now the market seems to be finding safety in defensives again. Have you taken that kind of stance in terms of what will hold out?
As far as defensives are concerned, I think the consumer sector is always one place where people seek to hide. I think right now valuations are good, not at levels which one would be expecting big buying. So defensives and the composition of the defensives has to change. I would think autos is a good place to start. We'll see interest rate cuts coming through this year. That will help the auto sector. In addition to that, I think the pharma sector, we have liked the pharma sector for a long time. We've seen good performance coming through from the likes of Glenmark, Lupin. And these are names which will continue to see investor interest and inflows. So these are some of the new sectors. I think IT will probably see its game return if the US shows a better trajectory in terms of growth. So if we see a combination of new sectors, and especially such as IT and pharma and autos, which would come into the defensive space, and where we think that there would be some good winners.
Okay, Sandeep, we'll leave it there. Good speaking with you as always. Hope the conference goes off well for you guys. In the